A cent increase in net revenue, reaching 67.9 billion shillings for the first half of the financial year, despite ongoing macroeconomic challenges. The group's profit after tax also saw a significant boost of 20%, climbing to 8.1 billion shillings, primarily driven by currency appreciation and improved operational efficiencies, as Jimmy Mbogo reports.
A combination of lower inflation, a stable exchange rate, and overall stable macroeconomic conditions supported EABL's half-year performance. The Brewers reported an 8.1 billion shillings net profit, marking a 20% increase in the earnings compared to the same period last year. This growth was backed by a 2% rise in sales, which totaled 67.9 billion shillings compared to the previous period. Despite the positive growth, the company remains concerned about distressed consumer income.
This sustained performance was fueled by growth across all our markets, with Kenya achieving 9% growth, Uganda delivered 3% growth, and Tanzania was an impressive performer at 16% growth, all supported by continuous investments in innovative product offerings, impactful marketing campaigns, and bolstered by route-to-market efficiencies.
Inflation, I think, is a big win across all the three countries. Really contained. The exchange rate is quite stable, and of course that is helping us in our business, especially from a costs of doing business perspective. I think if you look at that picture, it was a good enabling environment for doing business for us. However, having said that, I think from a consumer perspective, we know that the consumer has a depressed wallet because of too many things and too many demands from their pockets.
EABL has also recorded a 5 billion shillings reduction in its total debt. The board has further recommended a 2 shillings and 50 cents dividend per share, reflecting confidence in the company's long-term stability.
We are paying dividend out of real cash, and this just shows that our business started out with 10.4 billion in cash. We generated 22.7 billion, 2.7 billion above last year. We have used that to pay down interest costs of 3.8 billion, income taxes of 2.6 billion. We purchased fixed assets of 3.5 billion, and financing activities, of which 4.8 of that is the borrowings paid.
As the brewer navigates a volatile economic environment marked by high input costs, including the rising prices of raw materials such as barley, sorghum, and packaging materials, Karuku emphasized that the company's focus on the second half of the year will be on increasing efficiency and managing costs to cushion against these challenges.
So we are seeing some better prices for ethanol, as rains have been generous, and therefore there's a lot of sugarcane being grown. So ethanol is a positive story, and that has indeed helped our business. And looking into the future, the net effect could be more. I don't know.
Jimmy Mbogo, Citizen TV, Nairobi.